In the last 5 trading days, UNH has moved up by over 10%. And if we look at the recent lows of around $237 per share, the stock is now up almost 50%. So a couple of questions that investors are likely asking themselves is, why is UNH moving up so quickly? And is it too late to buy? And that is exactly what we are going to be discussing today. So there are a couple of things going on with UNH right now that is moving the stock price higher. This week specifically, there was a release from UnitedHealth Group stating that 78% of plans being selected for 2026 are 4 stars or higher. This compares to 75% of plans being 4 stars or higher in 2025. But why is this so important? Basically, what this star rating means is it is the quality of the plans that are being selected. Higher stars or 5-star or 4-star plans tend to have better healthcare coverage for the people selecting those plans. So what this means is people right now are selecting more coverage versus trading down for less coverage. And this is despite the fact that premiums are expected to increase by almost 20% in 2026. And this was a big concern for a lot of investors. They thought that people would trade down in terms of their plans with this increase in premium that was taking place. But what we are actually seeing is people elect for additional coverage, which is just the opposite of what a lot of investors had feared. And the company itself said that this number is consistent with our expectations and in line with historical performance. And I think the second part of that statement is extremely important. Being in line with historical performance is going to be a very positive thing moving into 2026, because this excites a lot of investors. Them getting back to where they have historically performed in terms of a lot of these numbers, especially their medical loss ratio, is going to be the key to unlocking shareholder value in 2026. And another fear that this information starts to address is a lot of investors were afraid that people would elect to not have health insurance whatsoever in 2026. From 2020 through till 2023, we saw a positive trend of a lot more people maintaining their healthcare coverage. However, in 2024, we saw a reversal of that trend. We saw an increase in the number of people who were uninsured. And in 2025, we have seen that trend continue. And obviously, if less people are carrying healthcare coverage, then that means less revenue for UnitedHealth Group. That means less EPS for UnitedHealth Group. That also means higher costs for the overall healthcare system in general. And a big reason for this recent uptick in uninsured people in the United States has to do with unemployment. In 2023, unemployment reached around 3.4%. That was a very low number. However, over the course of the last 2 years, we have seen that tick up to 4.3%. And there's fears right now in the broader economy that we will see this continued uptrend. And this is part of the reason why the Fed is starting to consider lowering interest rates. And really the thought around all of this is, as interest rates drop, companies should be a lot more willing to invest into their business. As they're investing into their business, likely they will need to hire additional people. With more people working, more people should have healthcare coverage, and that should lower costs across the board. And ultimately, the reason we are seeing UNH's stock price move up on the back of this news is because investors now have higher EPS expectations for 2026. And this is reflected in their forward valuation. Their forward PE ratio has now expanded to a 20. A year ago, they were trading at a forward PE ratio of an 18 to a 19. So clearly, investors are expecting more growth in 2026 than previously thought. And these low expectations are very clearly reflected on Yahoo Finance, because analysts for 2026 are only expecting EPS of $18.08. In my opinion, this is extremely low. My base case scenario for 2026 is the company putting up between $20 and $22 per share. And even on the top line numbers, I think analysts are extremely low. For next year, they're expecting revenue to only increase by 4.33%. I think they should grow by 10 to 12% again in 2026. I'm not going to talk through all of these numbers. You can pause the video and look over them. However, I do want to point out that this low and average EPS estimate right now, based off an average PE ratio, generates a fair value of around $300 to $325 per share. But keep in mind, these numbers are based on before this news release. As we have processed this news release and the potential increase in EPS expectations for 2026, that is why we are seeing the stock price trade up to this $350 per share. Because a lot of these analysts need to increase their EPS estimates to account for this new information. And basically, what we can do is we can actually reverse this calculation. So we can try and compare what the current stock price is, what a fair valuation is for the company, and what the projected EPS that the market is building into the stock price right now for UNH in 2026. And that EPS estimate that the market is now expecting for UNH to put up in 2026 is $19.60. But if you're like me and you expect the company to put up between $20 and $22 for a base case scenario in 2026, that means again, at an average forward valuation of an 18 PE ratio, that would put a fair stock price on UNH between $360 per share and almost $400 per share. Again, that's for a fair value for UNH. But again, keep in mind that that is a fair value based off 2026 numbers. That is a fair value for the stock right now. If we start considering 2027 numbers, I personally think that they should easily be able to put up $25 of EPS in 2027. I think it's honestly a lot more likely that they put up $27 to $30 of EPS. However, again, if we're being conservative, that would mean that at some point in 2026, as the market starts to price in these 2027 numbers, UNH's stock should trade for around $450 per share, if not all the way up to $540 per share. So honestly, I think that the company is still very undervalued. I think there's plenty of upside for the stock. I've built out a solid position on my own that we'll take a look at here in a couple of minutes. But I do think another thing that is going on this quarter is a lot of buying from super investors. These super investors added heavy last quarter, and I don't think that has stopped. I think they're continuing to add to these positions, and we should see this in the next report, a lot of additional buys from these super investors. I even was recently reading an article that thinks that Berkshire Hathaway is still in the red on their UnitedHealth Care position. I personally don't think that's the case. I bet their cost basis is somewhere around $300 to $310 per share, but I do think with the stock price still being down compared to what they should earn in terms of EPS over the next few years, I think that Berkshire Hathaway will see that discrepancy and continue adding to their position, especially because a lot of these large companies, they don't get many buying opportunities into, so they need to take advantage when they see these large dips. Another small thing to note is we have hardly seen any selling of UNH stock by insiders in 2025. Most of the selling occurred in 2024. So that tends to be a positive thing, because if the stock is trading at a low point and a lot of insiders feel positively about where the company is headed in the future, they will not want to sell out of their shares. Full transparency, I do own shares of UNH, so keep that in mind as you're thinking about what I've talked about in this video. Right now, this is the YouTube portfolio, and it's currently sitting at a total value of almost $80,000. And right now, UNH in this portfolio is sitting at my third largest position. I have 24 shares for a total value of almost $8,500, and we're up about 21% on this position overall. If you feel like you're a little bit late to UNH, I think there's a couple of other stocks that I hold in this portfolio that could be good buys into 2026. Oscar Health, I'm up almost 40% on. However, I do think that this company has a long way to go. I would not be surprised if by the end of 2026, it's trading around $30 to maybe even $35 per share. And then the other one that hasn't ran up is Novo. Novo Nordisk has a lot of growth potential in 2026, and right now the stock is trading at a fairly low valuation. But of course, let me know your thoughts down below. Do you own Oscar, Novo, or UNH, and what are your price targets on these three companies for the end of 2026? Let me know in the comment section down below. While you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.